Everyone, this is Terry Ryder from Hotspotting, bringing you today's edition of the good news to balance the avalanche of unreasonable and over-the-top negativity in mainstream media. And in compiling these good news bulletins, I have to say I'm constantly amazed at how easy it is to present lots of strong positive material, because there is a surprising level of activity out there in Australia which fits the theme. And what I'm presenting here this evening relates to information that's come to light over the past 2 days. This includes the publication of the minutes from the latest Reserve Bank board meeting, which notes, amongst other things, that most households with mortgages have significant buffers of accumulated prepayments, with around half of these loans having prepayments that exceed 6 months worth of payments. In fact, we know from other research that many households are more than 2 years ahead on their mortgage repayments, and this may explain why less than 4% of Commonwealth Bank's mortgage customers have actually applied for that mortgage holiday that's on offer. And the average across the major banks is just 5% of households with mortgages who have made inquiries about deferring their mortgage payments. And that, I think, in the circumstances, is remarkably low. The Reserve Bank board minutes note also that there's been a reduction in turnover in the housing market, but says it remains unclear how this will affect residential property prices. The evidence published to date, including SQM research data published yesterday, is that up to 3/4 of the way through April, there's no evidence of any major decline in house prices in the major cities as yet. In the past month, up to this week, both Sydney and Melbourne have actually risen in terms of the house price indexes, and the average across the capital cities is a rolling monthly rise of 0.5%. The Reserve Bank minutes also note the measures of household financial stress have been at relatively low levels prior to the COVID-19 outbreak. Now, looking at various markets across Australia, in Canberra, property inquiries by first home buyers have actually increased. And not only that, they've increased 56%. Data compiled by realestate.com.au comparing the number of current inquiries with the same period in 2019 shows that the nation's capital is leading the charge when it comes to activity from first-time buyers. Local agents and property analysts believe the changes to the federal government's first home owner scheme has fueled greater activity in the market, and that, coupled with the significant number of public service jobs in Canberra, may shield the city from the fallout of the COVID-19 crisis. Chief economist at realestate.com.au, Nerida Kanisby, said Canberra's market is doing better than the other capital cities. She says Canberra, it seemed, has been sheltered from the worst of the economic fallout, primarily because it's mostly government employment. Now, moving to Adelaide, the property market's reaction in the weeks after the COVID-19 was declared a pandemic has been revealed for the first time, with the results offering some hope. New data from Land Services South Australia reveals that the number of sales in the past month has been on a par with those recorded at the same time last year, despite the coronavirus impact. There were 2,614 residential market sales recorded across the state in the past month, just short of the 2,669 recorded in March 2019. And Land Services South Australia Chief Executive Brendan Pike says the figures are a reflection of the market stability. On the Sunshine Coast in Queensland, valuation firm Heron Todd White says in a new report, one of the questions we've been asked consistently over the past month is, how much has this changed the value of my property? And the short answer is not much. It says there's no evidence to date of a reduction in property values on the Sunshine Coast. Now, this market is underpinned by one of the strongest regional economies in Australia, and in particular by massive spend on new infrastructure, including the new $5 billion medical precinct and the new CBD, which is now under construction in Maroochydore. Now, there was a report yesterday from Australia's most prolific developer of apartments, Harry Triguboff, who owns and runs Meriton Apartments. He says his apartment sales are still substantial, although the rental income from his vast portfolio of residential units has dropped. On the sales front, the Meriton Apartments founder says that Asians are still buying plenty of his apartments. He says, so far, sales are okay. The Chinese are buying. I've sales happening everywhere. I have no problem. I'm selling in Parramatta, in North Ryde, and Rosebery in Sydney, and in Surfers Paradise in Queensland. Meanwhile, Meriton's construction division is powering ahead, currently building 2,000 new units. Construction is going very well, Triggerboff says. Now, we continue to receive reports of a booming rental market in regional centres in central Queensland, which relates, I think, to the connections to the mining sector. Recently, I reported there'd been a strong rental activity in Mackay and also on the Whitsundays region, and now vendors and industry leaders in Rockhampton say that their rental market is booming, with vacancy rates as low as 1.4% in Rockhampton and 1.2% in nearby Livingston. Agents say they haven't seen traffic like this since pre-2014. Todd Brandon from McGrath Rockhampton has recorded a spike in inquiries and applications when comparing now at the same time last year, and in turn rental prices are increasing across the board. Now, looking at some of the big resources projects that have made announcement, a $10 billion gas project in Queensland is getting closer to a start to construction. Arrow Energy has confirmed the construction of the first phase of its Surat gas project in southern Queensland will begin soon. The Queensland government's approved the project in February, and it will be the biggest resource project in the state in almost 10 years. So that's getting underway shortly. Mackay, which I mentioned earlier, will be the envy of Queensland after the virus crisis has passed due to its strong links to the state's resources centre. That's the prediction being made by industry leaders, including Queensland Resources Council Chief Executive Ian McFarland, who said Mackay will be the state's standout economic performer after the crisis. As it is now, he says, mining in Queensland and Australia is a crucial industry, adding that it'll be even more so as we exit from the shutdown phase. He says in Queensland we're underpinning 80% of, excuse me.
80% is 0.8.
Excuse me, I just had a bit of a glitch there. We will pause and start again. He says in Queensland we're underpinning 80% of exports and providing some 372,000 full-time jobs. We're going to continue to be a very important part of the economy. And I think Australia's heading for another resources boom as this country and the world recovers from the virus crisis, led by Australia's biggest trading partner, China. Looking at some of the big infrastructure projects that have made announcements. The developer of a $300 million wind farm planned for the Tablelands area near Cairns hopes to start construction soon on this renewable energy project called the Green Power Hub. It's proposed for a site near Ravenshoe. So far it has state development approval and includes 29 wind turbines, a substation, battery storage, access tracks and cabling to generate power for the national electricity market. In Melbourne, the big machines have finished digging the first stretch of the Metro tunnel, with two 1.2 kilometre rail tunnels now finished between Kensington and the site of the future Arden station. The major milestone was completed after the project's second tunnel boring machine, which is named after Australia's women's cricket captain Meg Lanning, broke through to the west. The Metro tunnel is scheduled to be completed in 2025, and by that time it will have excavated enough dirt to fill the Melbourne cricket ground 1.2 times, whatever that means. Melbourne's train network will be able to cater for an extra 500,000 peak hour passengers once the high capacity service begin running through that tunnel. Now in Perth, the $112 million Murdoch Drive connection will fully open to traffic on Monday, marking another major infrastructure milestone for Perth's southern suburbs. It will provide a new access to the Fiona Stanley Hospital and the Murdoch Activity Centre, as well as the Murdoch Drive extension to the Kwinana Freeway and the Roe Highway, and which will be ready for traffic on Monday morning. In New South Wales, the state government has approved a plan to nearly double the capacity of the Port Kembla gas terminal, which could begin supplying liquefied natural gas to New South Wales and Victoria by 2023. The Australian industrial energy venture at Port Kembla, which is backed by Andrew Forrest, now has the capacity to provide gas security to both states, according to the project's head, Peter Mitchley. The increased capacity could see the number of shipping movements at the terminal rise from 26 per year to 46. Still in New South Wales, the State Transport Minister Andrew Constant says a second wave of mega transport projects and the sale of assets to reinvest in new infrastructure will be part of a silver bullet to revive that state's economy. He says the pipeline of infrastructure projects will be one of the major levers that the state has to drive economic growth post-pandemic. He says the post-pandemic reset on infrastructure is very important, but it doesn't mean we slow down the program. If anything, we go the exact opposite. We go harder and we go faster. And he says the best way to drive growth is with a massive multi-billion-dollar infrastructure program. Looking at some of the property developments that have been announced. In Brisbane, Mirvac has lodged a development application for the next stage of its $1 billion waterfront Newstead community. The DA significantly expands the area's signature waterfront parkland, along with offering 1, 2 and 3 bedroom apartments, lifestyle amenities and retail features. Mirvac Queensland Residential General Manager Warwick Bible says the Mirvac team is tremendously excited about the proposal for the new Sky Precinct, which is set to follow in the footsteps of the previous stages of Waterfront Newstead, which record Pier, Park and Unison. Now also in Brisbane, a $450 million development is planned for the inner western suburbs. That's in Toowong, where a development application has been lodged with the Brisbane City Council to build Toowong Town Centre. The precinct will have retail, commercial, residential, entertainment and leisure facilities, along with a range of services like childcare, gym, medical centre across a 9,000 square metre site. Developed by State Development Corporation and White & Partners Sydney, Toowong Town Centre will have an open-air plaza which includes water feature that converts to a stage area. In Adelaide, the long-awaited $600 million Festival Plaza development, which includes a 27-storey office tower between the Adelaide Casino and Parliament House, is finally poised to go ahead after an agreement between billionaire Lang Walker and the state government. The agreement on revised plans provides a potential end to 8 years of wrangling over the prime riverbank site, and the state government is proposing to spend $250 million as part of that project to overhaul the public square component. Back to Perth, the West Australian government has declared the transformation of the iconic East Perth Power Station is another step closer, with two famous names combining to help deliver the $220 million redevelopment. They are Kerry Stokes and Andrew Forrest, whose companies have been chosen as the preferred proponents to transform the former industrial site. The long-awaited redevelopment aims to celebrate the heritage of the power station building, which ceased operations nearly 4 decades ago. Stage 1 of the project is expected to create 1,900 jobs, and that's in construction, and more than 1,300 operational jobs over the next 4 years. And also in Perth, National Property Fund manager Prime West has revealed it's putting together a syndicate with the intention to buy 7 West Media's Osborne Park headquarters. Prime West has sent out an information memorandum to investors to raise $75 million for the property, which it claims is in an area envisaged to become Perth's second CBD. And under the proposed sale and leaseback deal, 7 West would stay on as a long-term tenant for up to 15 years under the initial deal. Now all this is happening on a day in which Australia identified just 8 new cases of the coronavirus, the lowest daily tally since the 8th of March, as the curve continues to flatten further day by day. So that's it for now, but stay tuned. I'll keep bringing you some of the good news as we edge closer towards an end to restrictions and a return to some kind of normal. Bye for now.